Hey everyone, welcome back to the channel where we break down stocks with real data and straight talk. Today we're diving deep into AeroVironment, ticker AVAV, a player in the fast-moving drone and autonomous systems space. AeroVironment has been making waves lately after posting a massive earnings beat that sent the stock surging over 20% in after-hours trading. But there's also a class action lawsuit brewing over a canceled contract, so the picture isn't all rosy. Let's unpack the full story from the numbers up. Founded back in 1971 and headquartered in Arlington, Virginia, AeroVironment develops robotic systems including small unmanned aircraft, loitering munitions, and high-altitude pseudo-satellites. The company serves both U.S. government customers and international allies, with a heavy focus on defense applications. CEO Wahid Nawabi has been steering the ship through a period of rapid expansion in the autonomous systems segment while integrating recent acquisitions. On the top line, fiscal 2025 showed revenue split between product sales at roughly $693 million and contract services at about $128 million. The UXS segment contributed around $382 million, while LMS added another $439 million. Geographically, the business is almost evenly split, with domestic revenue near $391 million and international at $430 million, highlighting growing demand from allies. Earnings tell a more volatile story. Fiscal 2026 came in with revenue jumping to nearly $1.98 billion, but produced a net loss of $265 million or $5.40 per share. That compares to fiscal 2025, where the company earned $44 million or $1.50 per share on $821 million in revenue. The recent quarter showed outsized growth in the autonomous systems segment at 80% year-over-year, which helped offset weakness from the Blue Halo portfolio. Management commentary from the earnings call emphasized that demand for drones remains extremely strong and the funded backlog has surged 65%. The CEO noted they are scaling manufacturing capacity aggressively and described the long-term growth opportunity as never stronger, even as they work through integration challenges from acquisitions. Looking at the balance sheet, total assets reached $5.72 billion, with cash at $377 million after a big financing round. Total liabilities sit at $1.32 billion, while stockholders' equity stands at $4.4 billion. Operating cash flow turned negative at $78 million for the year, reflecting heavy investment in growth, and free cash flow followed suit. Gross margins came in around 22% on a trailing basis. For the valuation setup, we used a forward PE model as the primary engine, with PS in a supporting role given the company's growth profile and transition phase. Model confidence is high because analyst estimates are available and positive. The forward PE target was adjusted to 20 times to better reflect the growth trajectory, while the PS target was set at 3.5 times to account for current margin pressures. The model puts fair value somewhere around $140, compared with the current price trading near $165 to $170. That leaves the stock a bit above our rough fair value zone. Key drivers include the conservative FCF conversion assumptions due to recent negative free cash flow history, the terminal PE lifted 25 to align with industry multiples, and the share count growth held to 3% annually. Strengths include long-term strategic positioning in defense robotics and strong alignment with global security needs. Weaknesses center on recent profitability misses and integration costs from acquisitions. Opportunities lie in the booming demand for autonomous systems and international expansion. Threats include potential defense budget fluctuations and ongoing legal overhang from the securities class action. Over the past year, the stock has dropped more than 42%, despite a strong 17% bounce in the most recent week. The 3-month performance sits at negative 7%, and the 5-year return clocks in at about 65%, which is solid, but trails some peers in the aerospace and defense group during the latest rally. My take is that AVAV sits at an interesting crossroads. The 80% growth in autonomous systems is exactly the kind of momentum investors want to see in this sector, and the backlog surge signals real visibility ahead. That said, the big net loss in fiscal 2026, and the class action lawsuit tied to the canceled contract introduce real near-term risk. If you're thinking about adding shares, the current price above our model estimate suggests waiting for a pullback closer to the low 140s, where the risk-reward looks more balanced. Remember, these fair value estimates can shift with new assumptions, so treat them as ballpark guides rather than precise targets. Overall, AeroVironment remains a high-growth defense name worth watching as drone adoption accelerates, but the valuation and legal noise mean patience could pay off. Thanks for tuning in. Hit that like button if this breakdown helped, and I'll see you in the next one.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.